Hello traders. So today we're going to be talking about what I think is the best market for beginner day traders. Just a quick risk disclaimer, active trading and investing involves a substantial amount of risk and is not suitable for all investors. You may lose all or more of your initial investment. Past performance is not indicative of future results. So just get a few things out of the way. This presentation is my opinion only. Traders should definitely use their own discretion and choose the market which best fits themselves and their own personal situation. I'm not going to be talking about options trading, binary options, any of those things, because I think that's kind of out of the scope for beginners. Now, when I think of a beginner trader or a beginner day trader, I think they should have some of these qualities. So they, number one, have little to no experience trading. Number two, they have a very small amount of capital to get started trading. I think it's important that they choose a market which is stable and allows them to grow, something which isn't going to kick them and beat them down if they're wrong. And also, again, this is for day traders or scalpers. So ranking these markets from worst to best for somebody who wants to actively trade on a day-to-day basis. So with that, let's get started. So number 4, I think the worst market for beginner day traders is cryptocurrency, sometimes known as digital tokens, things like Bitcoin, Ethereum, Ripple XRP. These can be traded against each other. For example, you can trade Bitcoin versus Ethereum, or you can trade cryptocurrency against fiat currencies. For example, Bitcoin versus US dollars, or Euro versus Ethereum. It's a very, 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 very new asset class, so the future is kind of undecided about where crypto is going to go. Now, what are some pros about trading crypto? Well, number one, it's the only one which really has real 24-hour, 7 days a week trading. There is no minimum deposit, so you can start trading with as little as you want. If you want to trade with a dollar account, you can do that. Another great benefit of cryptocurrency is there is a ridiculous amount of volatility. So, a single trade can make 200, 300, 500%, which is great if you're on the right side. Now, what are some of the downsides or some of the cons about trading crypto? Well, I think these are pretty serious. I'm going to go through all these. The main one is exchange risk. So, because there is no centralized exchange, you have to store your cryptocurrency and also, your dollars, your fiat currency is stored with an exchange. And, these exchanges get hacked, they crash, they have bugs, they have errors. And, you can have a great week, a great year trading only to have your entire account liquidated or I guess, swept out by some hacker. Number 2, exchange fees and cost for trading crypto are very, very, very high, probably the highest among these markets I'm going to be talking about. Sometimes you're giving up like 0.5% or a full percent of just the underlying asset. If like Bitcoin is $6,000, you're paying like $60 in exchange fees for a single Bitcoin, it's too much. The cryptocurrency market is also very unforgiving. As I mentioned before, the volatility is huge, and if you're on the wrong side, it's going to really hurt. So, if you want to swing for the fences and put all your life savings in crypto and quadruple your money, yeah, you can do that, but you can also lose it all in a day. So I don't think it's that good. Tax reporting is also kind of an issue because of different regulations. You're gonna have to do the research and find out exactly like what your area wants and what they expect for reporting your taxes on your crypto gains. Personally, I think cryptocurrency is more suited for longer term trading, not for day trading. Again, you have this crazy volatility, so it's easy to get shaken out as a day trader, which is, you're just locking in losses if you keep doing that. And the last point is it's kind of awkward and it's kind of difficult to get access to shorts or short selling. if you're not familiar with that, short selling is basically betting that the price will go down. So, it's easy to make money. You buy something that's low, you sell it when it's higher, but you can also make money when the price goes down. You sell it first, and then you buy it back for a lower price. In crypto, there's kind of all these hoops you have to go through to get shorts, and it can be a pain to work through that. So that's number 4, cryptocurrency. Next, number 3 is Forex, also known as foreign exchange. This is trading currencies against one another. So, for example, US dollar versus Japanese yen, or maybe the euro versus the British pound. If you decide to trade Forex, you can focus on a single pair. You could trade only US dollar euro, or you could trade only US dollar Japanese yen. Or if you want to branch out and trade multiple pairs, that's also a possibility. Just it's really up to you. So, some of the pros about Forex trading. You have 24 hours a day, 5 days a week, where you can trade. Very convenient. The tax reporting for Forex is also on the simpler side compared to some other ones. Forex has great leverage. So, leverage when used in moderation and used correctly can be a great help to a small trading account. Of course, you got to be careful with it. Number 4, Forex, you can go short and go long very easily. There's no need to secure shorts or anything like that. You can do it right from the start. So you can make money when the price goes up. You can make money when the price goes down, right from the get-go. Another great benefit is Forex micro accounts. So you can have some brokers are offering accounts with minimum deposits of $1 to $250. So it's a great amount to if you don't have so much money and you just want to kind of get a little bit started in trading, just kind of place a little bit. You can risk like $100 and have a decent chance. You're not going to turn $100 into $1 million, but you can try and make 30% or something in a year, and it'll be fine. Now there are some serious cons again with Forex, and this is kind of why it's lower ranked on my list. You have a lot of differences among your Forex brokers. So different brokers have different spreads. The volume which is reported on the brokers is also different. So you're not really getting a clean look into the entire market. The biggest problem with Forex, in my opinion, is this point here. You're trading against your broker. So what happens is your Forex broker is a market maker. So he will take the other side of your trade. So if I want to buy something, okay, the broker has to sell that to me. So if I make money on my trade, the Forex broker is actually losing money on his trade. And if I lose money on my trade, the Forex broker is making money on his trade. So there's kind of like a battle going on. Like they want you to lose money so they can make money. So I think it's a bad thing. You should not trade Forex because of that. Another point, number 3, I think the fees and the spread can be very difficult for somebody who wants to be a scalper. If you want to day trade, it's not so bad, but if you're trying to scalp the Forex market, the fees can run into you might run into some issues with the fees being a bit on the higher side. So that's about it for Forex. Let's go to number 2. All right, stocks. Number 2. This is probably the most popular product which comes to mind when people think about day trading. We're talking about trading stocks or shares of real companies. Companies like Google, Apple, Nvidia, Disney, AMD, Facebook, Twitter. I know I'm just naming off tech stuff, but there's thousands of stocks that you can trade. And this can be kind of a pro or a con, depends on what you're interested in. But before you trade stocks, you sometimes need to do a scan or do a sweep of the market and find out, which stocks are in play today, or which stocks have setups which you like to use for your trading. And if you like that, it's great. If you don't like that, it's just kind of extra work you have to do. So it could be a pro, could be a con, just depends on you. All right, so what are some pros about trading stocks? Well, there's, again, as mentioned before, there are thousands of stocks to trade. So you have tons and tons and tons of opportunities if you know the right places to look. You also have, again, because there's so many stocks, you can have high volatility stocks, low volatility stocks. If you like, taking big trades, you can trade the high volatility ones. If you like playing a little bit safer with small risk, small reward, you can trade low volatility stocks. It's very flexible. Number three, you can be extremely flexible in your position sizing. So if you want to risk, for example, $100 on a trade, you can buy, 73 shares or 71 shares or 52 shares instead of being stuck to a flat amount. This will come up when I talk about futures later. What are the cons about trading stocks? And again, these are pretty big. Pattern day trader rule. This is probably the biggest hurdle for beginner traders. Is if you want to day trade, you need to have over $25,000 in your account. If you make more than 3 trades in a week, your account basically gets locked out of trading, which sucks. So you need to have at least 25,000, and that's probably even too low. If you have 30,000, then maybe it's safe. You can start day trading on that, which is, again, I think it's too much for a beginner. Alternatively, you could try and use an offshore brokerage. There are some various offshore brokerages which allow you to get over this pattern day trade rule, but you're looking at higher trade costs, higher commissions, trying to deal with these kind of shady companies, so could be kind of risky in my opinion. You could use a cash account, which means you're just trading. You can only go long on a cash account, so you can only make money if prices go up. You can't make money if price. You can't short on a cash account, and you also have to wait 3 days for your money to settle after each trade. So you could day trade on a cash account, but you have to wait 3 days for your money to settle, for it to come back, and you can't go short. So I think it's not really too good here. Tax reporting is also kind of a pain on stocks. Kind of each stock that you trade is like an individual income moment or whatever, so each has to be reported individually, which can be really ridiculous when it comes to tax season. Strict trading hours. If you want to trade American stocks, you can only trade when the American stock market is open, and that's a very limited time of the day. If you're in a different country and you don't have a high volume stock market, well, you're kind of out of luck. Sizing calculations, I know I mentioned before it's flexible, but it can be kind of complex to calculate this. So again, if you want to risk $100 on a trade, you have to calculate these numbers before you get into the trade, so you know exactly how many shares you want to buy or how many shares you want to sell. The last point, sometimes it can be difficult to find shorts for the stocks you want to short on the day. You sometimes need to contact your broker and get them secured before the day starts or as the day is happening. So you may see a great short setup, but your broker has no shorts available, so you're just kind of sitting on your hands, not able to take the trade that you want. So that's it for stocks. It's number 2, and that leaves the last one. Number 1, I think the best market for day trading for beginners is the futures market. So this is a derivatives market. You're trading something which is tied to a real asset. You're not trading, the stocks themselves, but you're trading something related to the stocks, based on the stocks. There are many different products across different markets. You can trade currency futures, like the Japanese yen or the euro. You can trade stock indice futures like S&P 500 or the NASDAQ, and even more. You can trade gold futures, oil futures, bond futures, gas futures, orange juice futures. There's a lot. And I think this is the ideal market for day trading and for scalpers. So why do I think that? Well, you got 23 hours a day, 5 days a week. So it's not as good as some of the other ones, but 23 hours a day, 5 days a week is pretty solid. The exchanges are extremely transparent. There's only one exchange. So everything that you see is the same thing that everyone else sees. All the volume you see is the volume everyone else sees. No one has any upper hand here. They're all trading. It's all fair. You can access shorts very easily in the futures market. You don't need to worry about trying to find them or secure them. They're always there. They're always available right from day one. Trading fees are extremely low for a futures market. You can get a single tick and it'll more than cover your trading fees. So all you need to do is get one tiny move in your direction and you're positive on the day. Unlike a stock where it can move 5 cents in your favor or $1 in your favor, but you don't make a profit because your commission is too high. In the futures market, if you get a single tick, you will more than cover your cost of your commissions. Margins are also very low for day traders. A very popular product, S&P 500 ES, has a $500 day trading margin. It's higher for overnight, but again, we're day traders, so all we care about is the intraday margin, $500. Great leverage. So again, using the example from before, a $500 S&P 500 future, a single tick is $12.50. So that is great leverage. You can make a lot of profit, and you can also lose a lot. But it's a good balance between giving you enough leverage to take some good trades, but not too much that you're going to blow your account up in a day like you would on something else. You can start trading with a smaller account size compared to stocks. You can trade with, I guess you could trade with $500, but I wouldn't recommend it. Probably something around $2,000 to $3,000 would be an ideal amount to start trading with on futures. And the last point, the tax reporting is very simple. You just basically sum up all the money that you made or all the money that you lost, and you treat it as kind of one taxable moment. I can't think of the word right now. What are some of the cons about the futures market? Well, because the leverage is kind of high on the contracts, on single contracts, trading a one lot or one contract and trading a two lot is basically double the risk for double the reward. So if you want to, if you only want to risk $100 on a trade, and so you can risk, let's say 8 ticks on ES. Again, this is just an example. You don't need to know exactly what I'm talking about. If you go up to a two lot and you want to risk 8 ticks again, you now need to risk $200. And if you want to, so it can be quite hard to size up and size down your risk reward because each contract has kind of a very high amount of leverage, which also is the second con. Great leverage. So it's very easy in the futures market to get over leveraged and dig yourself in a hole. So with great power comes great responsibility. Same thing applies to leverage. And another con about the futures market is the high volume times only happen during certain times of the day. So for example, if you want to trade S&P 500 futures, that's tied to the US stock market. So the volatility and the volume is very high during the stock market hours. But something else like oil or currency futures have higher volume during other times of day. So it's completely possible to trade, during the off hours, but just be aware that you will need to be aware of what time you're trading, and trade the time which kind of fits, or you have experience, or you have a plan for trading. So that's it for futures. Again, I think this is the best market for beginner day traders. So let's wrap it up. Something to think about. Number one, first, really think about if you want to trade live. Remember that demo trading is something you can do for free, and you can do it forever as long as you want until you save up enough money to trade the market that you want to trade. Just because Forex, you can trade Forex with a $50 deposit, maybe you shouldn't if you don't like it or you don't understand it or you'd rather trade something else. Just trade stocks on demo until you have enough to trade stocks, until you have 30K, or just trade futures on demo until you have $3,000 to trade futures. Also, again, really think about which market fits your current situation. So I think futures is the best for beginner day traders. I think stocks is number 2, Forex is number 3, and cryptocurrency is number 4. But, if you're really interested in cryptocurrency and you love that technology, then go ahead and trade crypto. If you really like Forex, by all means trade Forex. If you love stocks, trade stocks. Whatever makes you happy, whatever fits your situation is what you should trade. And again, number three, think about, is day trading really for you? Because it does require a lot of focus. It requires a lot of time. It's not easy. If it was easy, everyone would do it. But it's totally possible to be profitable in any market, assuming you put in the time, effort, capital, and have realistic expectations. If you want to swing trade Forex, that's great. Just because I say Forex is number three for day trading doesn't mean it's not number one for you for swing trading. So, hope this helped. Maybe you found a new market which you never considered before, or maybe you have solidified your original beliefs about which market is best for you. Again, you can make money in any of these markets. It just takes time and effort. So, that's it. Thanks.